Greetings to our clients and friends. We've experienced a significant amount of volatility so far in 2016 and a general softness of stock prices. I'd like to take this opportunity to share a bit about a historical perspective and some insights into today's markets. Well, let's talk about the current state of the economy. First of all, we can't predict how long this time of volatility will last, or actually how low the markets will go. And frankly, neither can anybody else. We do know, though, that analysts are suggesting that this volatility will likely continue through 2016 and possibly into 2017. Now, several factors are driving this. First of all, we have the uncertainties in China. Second of all, we have the declining commodity prices, specifically oil. Third, we have the presidential election. And fourth, we have interest rates. Now, the Fed has said that they're going to gradually increase interest rates. It remains to be seen how long this will be, what magnitude this will be. But we do know that this is a deviation from the previous easing of monetary policy that's been going on for the last 7 years. Let's turn our attention to historical observations and a perspective about the market. Well, we can be confident in the long-term direction of the market. History doesn't repeat itself, but the emotions and the patterns of the markets are consistent over time. If you go back to the 1930s, markets have declined by 20% or more every 4 to 6 years. Now, the last time the market declined in this sequence was March of 2009. So we're now moving into the 8th year, and we haven't had a market decline of over 20% or more. So it's overdue. In each prior case, the market recovered and rose to new highs. It's important to remember not to let the daily news drive your perspective and your conclusions about the market, the economy, or your portfolio. You see, news generally reports on negative events. And further, what you also see is the news treats the stock market much like the weather and much like traffic. Now, we need to know what the weather and the traffic are like every day. We need to know whether to carry an umbrella or bring our sunglasses when we go for an appointment. And we need to know the traffic because we need to know what time to leave for an appointment and what to expect when we get there and what route we take. So unless you're a day trader, really the news on a day-to-day basis about the market is not really applicable in the same way it is for weather and for traffic. I would defer to Warren Buffett's philosophy about that. So Warren Buffett, in his writings, indicates that investors would be better served if they close the books on values for 5 years and then open them up 5 years later. In fact, John Templeton probably said it best. What he said is, do not try to outguess the market, buy a quality portfolio and invest for the long term. Well, let's turn to your portfolio. Now, your portfolio is structured and diversified to weather the storms in the market. It's really built on 3 tenets. Let's talk about those. First, your unique objectives. Your portfolio reflects our careful assessment of your unique goals, your return objective, time horizon, income needs, and risk tolerance. If those factors should change, please feel free to contact us. We can also address this at our next review meeting. 2, it reflects our ongoing research. Your portfolio includes best-in-class money managers identified in our step-by-step selection process. Our monitoring assures us that those managers continue to meet specific performance and management expectations. We adjust those as needed. And number 3, the season of the economy. Your portfolio is positioned well for this economic season. As you recall, you've got foundation and growth components. Foundation is designed to provide stability to mitigate stock market volatility, while growth is the inflation hedge, where managers are searching for attractive values in today's markets. In addition, you've got a dynamic component allowing the money managers to incorporate a very flexible go-anywhere strategy. Each component is designed to perform well during different economic conditions. Now, the diversification will not eliminate risk, but it is designed to manage risk over time. Naturally, the past is not a guarantee of the future. So let's summarize. As we move through the next several months, we'd like you to be mindful of 3 parting thoughts. The first 2 are your responsibility, and the last one is ours. First of all, continue to be patient. As the quote goes, this too shall pass. Now, we've had different events, such as Y2K in 1999. We had 9/11, that was in 2001. We also had the Great Recession, 2008 and 2009. You see, the events are different, but the patterns are the same. The best course of action is to remain in a diversified portfolio consistent with your goals, and keep in mind that long-term focus. History indicates that if we miss out on a few of the best days in any given market cycle, we'll miss out on a significant portion of the growth of that market cycle. So it's important to know that you're diversified appropriately and remain focused in the right direction. Second, maintain the appropriate perspective. The media would have you focus on the short term, the day-to-day market movements. You have a well-designed, time-tested portfolio designed to deliver positive outcomes over the long term. So keep a focus in that direction. Don't be swayed by the ups and downs of the day-to-day market movements. Third, stay proactive. And that's our responsibility. You see, your funds and your management team are proactive. Now, proactivity isn't necessarily moving from one fund to the next. You see, your managers are proactive within the portfolios. They're providing protection in certain parts of your portfolio, and they're providing growth opportunities in others. In addition, we as your financial team stay proactive in monitoring the markets and keeping abreast of changes in the economy as well as changes in your money managers. And if the need arises, we'll make changes in your portfolio as well. On behalf of myself, Paul Reed, and your entire financial team at Paul R. Reed Financial Group, I want to thank you for taking the time today. And also thank you for your continued trust and confidence over the years. And please remember, if you have any questions, comments, or concerns, don't hesitate to contact us. Thank you and good day.